going to take a look at a non-direct recognition case study. And what this is going to represent or display is a policy on a 45-year-old male where he funds a policy for 5 years. And the funding can really be anything we want. What we want to look at is what is the impact of loans on a non-direct recognition company, rather than just talk about it conceptually. So what we have here, again, is a 45-year-old male, a non-direct recognition policy. He contributes $50,000 per year for 5 years, nothing thereafter. And again, this policy, we don't want to focus so much on the returns. It's not maximized for performance here. The purpose of this is to display how loans work. Performance is strong though, year 3 break-even point. Now, what we have on the right is the exact same policy. The difference here is we're going to look at policy loans. So the first thing we have here is a policy loan coming out in year 5. What I want to know as a consumer is what is the impact that that loan has on my life insurance policy. Because I have a non-direct recognition policy, that means the company's telling me, I take out this $200K, I, the insurance company, I'm still going to pay you dividends on that, as if you never touched it. Okay, let's see. So I've got the $200K loan outstanding. Here's my cash value. View that as my line of credit. That's the actual amount of money I can pull from the policy. Now they are going to continue to pay me dividends here. And how and why an insurance company would do that, because they are good at making money, is what we want to look at is the death benefit here. This is the amount, or the figure I should say, that the company is going to hold as collateral. So if I take a loan outstanding and the insurance company says to you, I'm still going to pay you a dividend as if you never pulled your money out in the first place. That sounds great. That's like a piece of real estate that does nothing but appreciate forever. How and why they do that is they collateralize our death benefit. You will always see a dollar for dollar reduction on the death benefit when I pull out a loan. The upside for the insurance company there is, remember, they're a life insurance company. First and foremost claim or responsibility is to pay out life insurance claims. So if we die with a loan outstanding, they've got to pay out that much less. Now, let's look at the loan repayment here. Here we are repaying it at $50,000 per year. We can repay it however we want, but what I want to tally up is the repayments. So I borrowed out $200, 4 years of 50, another year of $28,975. I paid back, call it an extra $29K in interest. The interest rate on this account, by the way, was 5%. This was money that went to who? The insurance company. Now, when I had that loan outstanding and when I am paying it back, again, this is a non-direct recognition company and policy, meaning my dividends never changed. Exactly the same all the way through. And really the proof of that, what I want to see if I'm looking at a non-direct recognition policy, here's my cash value and death benefit in year 10. Over here on the right, we pay this loan back by year 10. What are my values there? They're exactly the same. Fully restored to what they would have been as if I never touched the money in the first place. Again, the company did not recognize the fact that I had a loan outstanding. If I progress on to the second loan, you're going to see the same thing here. Year 12 pulls out a $300K loan. Cash value is my line of credit. That's why you see the reduction here. And then look at my death benefit as well. Dollar for dollar reduction went from $933 down to $633. Same repayment schedule. There's my loan interest. There's my loan balance. Once it is repaid, my values, and what do I have? I've got it highlighted here in yellow, fully restored to exactly what they would have been, again, as if I never touched it in the first place. Main takeaway, non-direct recognition. The company does not recognize that I have a loan outstanding on my policy. From a borrowing standpoint and how loans work, it is easier to follow or easier to understand because, again, no matter what happens, I'm going to get the same dividend on any money in cash and any money loaned out.